So thank you, ladies. Thank you, Zinati. Thank you, Fifi. Now let's move on. Now, amidst the global financial turmoil, savings and debt have been two words murmured every day as people try to sustain their finances. Now, one important aspect of this is a retirement fund. And joining me to talk more about this offering is Grant Locke, the head of OUTvest. Grant, thanks for joining us. Now, you can imagine with this crisis, many people have been focused on trying to preserve what little in terms of savings they have, lucky for those who have a lot. But let's just talk about one of the things that you talk about in this instance, which is, of course, the structure of the fees that you get charged. What exactly do we pay for?
Thanks for having me on the show. So I think the first thing that people need to understand is that in the world of investment management, the fees that you pay are typically a percentage of the money that you have invested. And the reason that it's done this way is because there are typically lots of companies involved in managing your investments. And one of the easiest ways to administer that is through the use of a percentage, because it scales beautifully, and you'll see why. So typically there are about 3 different types of fees that's charged in an investment arrangement. So the first is your advice fee, and that's the fee that's charged by your financial advisor. The second charge is a fee that's charged by the administrator of your investments. That is charged to make sure that they process your debit orders, to make sure that the money ends up in the right investment vehicle, producing your tax certificates, processing all your instructions, etc. And the last one, the one that everybody knows, is the fee that's charged by the investment manager.
Yeah.
This is typically charged as something called the total investment cost and happens inside the fund. Now, the only way you know about your fees is if you bring all of these fees together, and that's when you have an understanding of the total amount that you pay.
Yeah. Yeah. Now, I was going to say, I would rather just know that I'm paying and, not be bombarded with all these other bits and pieces of what I'm paying for. But from an investor perspective, why should I know what I am paying for?
This is one of the things that sort of I think is so important, but is so lost. When you have a percentage-based fee, when you're paying something like 3% on the value of investments, it doesn't sound like a huge amount. And if you have 100,000 Rand invested and your total fee across your advice, administration, and investment management is 3%, well, that's about 3,000 Rand a year. And, if you compare that to other aspects of your life, it sounds kind of sensible. But when you look at your retirement savings and you're starting to sort of build up an amount that will sustain you in retirement, and you're talking like something like R1 million, well, then your fees are 30,000 Rand a year.
Sure.
And then you need to ask yourself, well, hang on a second. I'm paying 30,000 Rand a year. What do I get for that? Am I getting the same thing as when I paid 3,000 Rand a year? And that's the first part, right? Because what happens when you compound this fee difference over someone's retirement? And I've got a quick example I want to share with you.
Yeah.
So, for example, if you're 35 today and you're saving 2,500 Rand a month and you've got 35,000 Rand already in your retirement savings and you're retiring 3 years later at 65, well, if you were paying 3% in fees, your retirement outcome would be something around 6 million Rand, assuming the growth rate of an average balanced fund. But, if your fees were lower, say, for example, you were using our one fee model, the outcome will be about nearly 9 million Rand. And that's that the compounded savings and fees have such a huge difference on the value that someone gets out of their retirement savings. And that's the revolution that we think is coming.
Absolutely. It's a big revolution, no question about it. Now, the other day, I had a call from a friend of mine. He was asking me, Godfrey, what do I do in this environment? I've got a little money that I've put aside. What advice are you giving people like him who are coming and knocking and saying, I hear the markets are falling. What should I do?
Look, I think the way that we approach investment is really around a buy and hold strategy. So it's following in the footsteps of the greats like Jack Bogle and those where we sort of don't try and time the markets. What we saw in between February and March, from the 23rd of February to the 23rd of March, global equity markets fell 30%. And just in the subsequent month, they recovered incredibly sharply. Now, you were trying to time that. It is incredibly difficult and expensive to do. So my advice, or what we try and advocate, is get your asset allocation right, your mix between bonds and equities and cash for the time horizon that you plan to invest, your time until you retire, and literally forget about it. Focus on your contributions. Focus on getting more of your contributions in. Let the capital markets do the work for you.
Absolutely. Two more quick questions, Grant, if I can. One, so some people may be looking at this environment and thinking maybe this guy that I am with is charging me a lot of money. I need to change. I want your thoughts on that. And then secondly, am I in any way able to influence how much I am charging? I'm being charged.
So I think to your first question, yes, you can do something about it. You can go and discuss your fees with your provider, but the way you need to do that is you need to understand what they are first. You need to ask for something called the effective annual cost. That's the only way you're really going to know what you're paying. And the effective annual cost will break down your fees by the different services you receive. And that starts a discussion. That's when you can start to do something. There are many providers out there, including ourselves, that you can sort of target if fees matter to you, or if you're paying fees that you think are too high. For example, we think 3% is quite high in fees. We think with our one fee model, you can do a lot better than that. But, there obviously are questions around making sure that your retirement plan is suitable for your own personal circumstances. And that's one of the things that OUTvest we take very seriously.
And secondly, the second part of the question, Grant, was around whether you can indeed transfer from one part to the next and the kind of issues that you should consider if you do think about it.
Of course. Yes, of course you can. You can transfer your pension from one provider to another. The thing you need to be aware of is that some providers, typically the older ones, do charge a penalty fee. So that's charged as a result of them losing out on future revenue that they've expected to receive from your money if you'd held it to term. And to be honest with you, we think that's grossly unfair, that people get charged a penalty when they decide to move their money. At OUTvest, what we do is obviously we don't charge any penalties. If someone comes or decides to leave us, we don't charge any penalties at all. If you come onto the platform and you're transferring your pension fund from another provider, and you are charged a penalty fee, we'll actually do a calculation to make sure that the fee benefit that we offer relative to existing providers' fees overcomes the penalty that you are paying. And if it doesn't, we'll tell you. We think that that's really, really important in obviously our duty as a regulated financial services provider to make sure we're doing what's in the best interest of clients.
Perhaps, Grant, that should be legislated as well, because the penalty fee does sound unfair. But for today, let's leave it there. Grant Locke is the head of OUTvest. We've been talking about how to behave with your money in this environment, which we don't know how long it will last, and the kind of impact that it is going to have on financial markets. Until next time, goodbye.